Hello, I'm Joseph Brandcamp, and this is Average Joe Dividend Stocks. So, if you're new here, I'm going over my account every single week through this depression, I guess we'd call it, and seeing how my account goes and where I'll be in the long term. So, I hope you all like this video, and if you like what I'm doing, hit that like button. It'll help the channel out a lot, and subscribe to it, please. And leave some comments in what you want me to talk about or how you think I'm doing and what stocks you're interested in buying and why you think they're good stocks. With that being said, let's get into it. It was a wild and crazy week in the stock market last week. It was our first positive week since the crash. We had 3 straight positive days, and we ended on a bad note on Friday, but it was our first back-to-back gains since the crash. So I'm pretty excited. It looks like it's gonna start evening out. I'm still gonna keep buying as many stocks as I can while it's down, because it's still down quite a bit. So with that being said, I'm gonna show you the week that we had. It was crazy. So here it is right here. All right, in that 5-day graph, as you could tell, I went up almost $1,000 in just 4 days, which is crazy move. I was up 11% on Tuesday. My account was 11%. That's a huge jump. So, and then Friday it kind of brought us back down a little bit, but we're still up for the week. So that all worked out good. And now I'm gonna show you a 1 month chart, because we almost were back even with 1 month ago. All right, here it is. The reason why the market was down Friday is 3.3 million people applied for unemployment, and I believe most of that is temporary. Like at the company I work for, whenever we went down to 4 days a week for a little while, they let people draw unemployment for that 5th day as long as they stayed under 32 hours, since it's a full-time job and we were doing part-time work. So I believe that's just temporary. A lot of that is. And then another factor is USA's always got to be #1 in everything. So we overtook the most cases for the coronavirus, and that news came out too on Thursday. So the market was down Friday because I believe because of those 2 factors. All right, I got some more screenshots I want to show you. Like I said last week, I was gonna buy 2 Carnival Cruise Line shares and 1 Texas Roadhouse share. But since the market went up and I buy my shares on Thursday, I actually ended up buying them on Wednesday. But the market was going up so much that with my $50, I wasn't going to be able to buy that. So I put an extra 25 in there so I could still get the Texas Roadhouse and 2 Carnival Cruise Line shares. And at first I thought I got away with it without my wife knowing. But she asked me Friday, "Oh, you put extra money in your account, huh?" I was like, "Yeah." Figured you'd see it eventually, but yeah. So I put $75 in, not my normal 50, and I got the shares I wanted to get this week. I'm gonna keep buying Texas Roadhouse until I get it even with Foot Locker at 11 shares, and then I'll probably go back and forth between Foot Locker and Texas Roadhouse. And then I really want to start buying Kraft Heinz again, but as it goes right now, Carnival Cruise Line is my best option. I'm down the most on it, so it's my best option to buy to bring my shares down even lower. So I'm gonna work on Carnival Cruise Line for now, but Kraft Heinz still in the back of my mind. I still want to buy more shares of it. And then alright guys, and never buy stocks just because I'm buying them. Do your research, buy stocks that you want to buy, that you feel good about, and that you studied up on the company and you feel like it's going to be a great company over the next 5 to 10 years. We got my watch list, which I'll show you right now. Alright, I hope you like that watch list. I know I say I only buy dividends. There's 1 stock on there that does not pay a dividend, and that's Facebook. But that stock is really undervalued, and I would love to own some Facebook shares, and I'd probably hold it for like 5 years and then sell it and then buy some more dividend stocks with it. But I feel like I could make a lot of money off of Facebook. Another one I'd really love to buy is Whirlpool. So if we get our stimulus check before stocks go back up really high, I'm planning on buying. Those are two stocks I'm gonna buy with it: Whirlpool and Facebook. Then I'm gonna work on my other shares with my $50 a week, like I have been. All right, I'm gonna show you the dividends that I'm getting for my stocks and what a ex-dividend date is, and the dividend when the dividend payment comes in. So the ex-dividend date, you have to own the shares before the ex-dividend date, or you don't get paid that dividend whenever they do the payment. So like I've owned Kraft Heinz for a while. I've owned all of my shares before their ex-dividend date. So I got 54 shares that I'm gonna get a dollar, well not $1.60 because you got divided by 4 because they pay every quarter. But I should get a full free share. They paid me Friday, so Monday when I go back in, it should show in my account. I should be up to 55 shares on Kraft Heinz. Then I'm gonna keep track of all my free stocks I get from reinvesting, and I'm just gonna keep track of it so I can show you all how much I actually gain, not just by the market, but by the dividends too, because we gotta add the stock account for some reason doesn't keep track of it. The money goes into your account first and then reinvest into the stock. So it's technically your money, but it's free money. So I'm gonna keep track of it myself and show you all how much I actually gain on it, counting the dividend money. But I'm gonna show you a screenshot of Kraft Heinz where I was talking about the dividend date, the ex-dividend date, and then the payment. I took a screenshot of that, so here it is right here. All right. I hope you all enjoyed the video. I hope you all learned what a dividend, or kind of what a dividend is. They just pay you to hold your shares because you're a part owner of the company. So they pay you just to hold their shares. It's like a thank you for being an owner. It's like your payment. All right. So if I wouldn't buy any more stocks or reinvest my dividends for the rest of the year, I'll make $241.16 just on dividends. So of course I'm gonna keep buying stocks. I'm gonna keep reinvesting. So that money is just gonna get more and more and more. So that's my plan. This week I'm probably gonna buy a Texas Roadhouse, and depending on where the market goes, I might only be able to buy one Carnival Cruise Line share, and then next week we'll just keep on going with that. So if I have any more money left over, I'll leave it for the next week. So then maybe I can buy 2 Carnival Cruise Lines in the next week, and then start buying the Kraft Heinz like I want to too. All right, guys, I'm gonna go a little bit into margins. So margins is something I would never do. For one, I hate owing people money, and it's pretty much a loan. So I would never get a margin no matter how bad it is. Like the market's down so much right now, I would love to borrow some money and do it, but I don't like paying interest on it because it kind of defeats the purpose. You're borrowing money to try to make money, and if the market stays down for a while, they're going to make you sell those shares, and then you still got to pay the money back. So I don't believe in doing margins, and like I say, it's pretty much just like a loan. The more money you have in your account, the more they'll let you borrow and stuff like that. It's your stock buying power. You might have seen it on one of my screenshots, but yeah, I'd never do margin. This type of person I am. I don't take loans. I don't like borrowing nothing from anybody, and I don't see the purpose of borrowing money that I'm gonna have to pay interest back on, and then I could eventually, like the market's down way big right now. So if I'd have had stuff on margin before the crash, they would have made me sell them shares. I'd have lost out on all that money, and I would still have to pay them back and the interest. So I don't believe in margin. That's why I'll never buy stocks with margin. My shares, when I first buy them, they show margin whenever I first buy them, but I put the money in, then I buy them, and it'll show margin while the money's trying to clear, and then as soon as it clears, it goes off of margin. It takes my cash right back. So that's just how I feel about margin. I'd never do it, and I don't recommend doing it because I mean it's just like credit cards or something. If you just keep getting it, eventually you're gonna put yourself in debt, and you don't want to do that. So that's my thoughts on margin. Well, all right, guys. I hope you really like this video. I hope it's helpful for you. I'm gonna try to go more in depth with dividend investing and long-term investing. Uh, I'm not gonna be a day trader. I buy stocks for the long run. That's where you make your money at. Like, if you look at it, one of the richest men in the world, Warren Buffett, the reason why he became so rich is because he's a long-term investor, and he has always bought stocks when the stock market's down. You can look at it. He's 90 years old, and he's been buying stocks that whole time. He's went through a lot of downs in the market, but the market's always ends up higher than what it was. It always goes up. You'll find your bumps, but that gives you the opportunity to buy more. So I wish I had more cash on the sideline. Unfortunately, I only put in what I can. I have a 401k at work, and I buy my work stocks too, which they match me on both of those, so I get free money out of that. But I really wish I had more money on the sideline right now. If I had more money on the sideline, I'd buy a ton of stocks. So I hope you liked it. Y'all have a good day, and I'll see you next week.